Welcome to your weekly market update where we talk about everything mortgage and real estate related. We've been out for a couple weeks during the holidays, but we are back at it and have a lot of great information to talk about. So let's jump right in it. First off, Redfin released their housing report for June, showing that supply remains very tight. Active listings are down 14% year over year, and new listings are down 31%, meaning more inventory is not coming online soon, and it will keep upward pressures on home values. Demand is strong. Bidding wars took place in nearly half of all of Redfin's listings. The average sales to list price ratio moved over 100 for the first time this year, which means that on average homes sold above their list price. We're seeing a lot of that here locally in Chicagoland area. Very tight inventory and strong demand is increasing home values. We have Zillow, Black Knight, and FHFA are already reporting record high home values in their reports, and we expect this trend to continue. Zillow reported that home values rose 1.4% in June, and home values have now risen 4.7% year over year, and it's the highest number on record. The pace of 2023, check this out guys, calendar year for 2023 is at a very strong pace of 9.4%. Now, as for housing starts, when it comes to construction, housing starts in June fell 8%, which is it fell 8%, which is weaker than expected. Year over year, housing starts are now higher by 8.1%. Now, that is good news. The home starts are higher than last year. It's not the best news that they've come down from last month or this month, because we need more new construction to take away from that very strong demand from the pending and the existing home sales. The NAHB Housing Market Index, which measures builders' confidence, rose by 1 point in July to 56. This index is firmly in an expansionary territory above 50 once again. Lower existing home inventory is just pushing up new construction. A lot of information on real estate. Bottom line is that we've been talking about this for, I think at least 6 months, that inventory is low, there's still strong demand, home builders are not building homes fast enough, and people are still having kids and need more house to live in. So we'll continue to update you on housing. Let's talk about mortgage inflation. So last week, the June's Consumer Price Index came out, reported that overall inflation increased by 0.2%, which was lower than the estimate of 0.3%. Year over year, inflation has declined from 4% to 3%, which is lower than the 3.1% expected. The main focus, the core CPI index, which strips out food and energy prices, decreased from 5.3 to 4.8%, which was also lighter than the 5% expected. One number that's helping inflation is CoreLogic reported that rent prices now are only up 3.4% year over year, which is down from 3.7% in the previous report. All of this information is pretty much pointing to lower interest rates in the future, lower inflation, and then lower interest rates, because that's what the Federal Reserve wants in order to pause increasing the Fed fund rate and eventually start decreasing it. So we'll keep a close eye on this, continue to update you weekly. Mortgage applications from last week to this week show that purchase applications fell 2% and are down 21% year over year. That just has a lot to do with the fact that we don't have enough homes to sell, and there's just not enough inventory. So I'm here to help you with any questions mortgage real estate related. You can reach me at 847-942-1497 and make it a great one. Bye.